Good afternoon, everybody, and welcome to this edition of Riveron's Ask the Expert webinar series. This is part of the firm's initiative to communicate, share with the market our knowledge and expertise. In this particular iteration, we are focusing on lease data and the collection and abstraction during the 842 adoption process. Just to let everybody know, this session is being recorded, so if there is any objection to that, now would be the time to drop off. And with that, I think I'd like to just introduce myself. My name is Craig Rowling. I'm a manager here at Riveron. I deal in the 842 space fairly significantly, and I will be the host for today's call. Just to move on to a few housekeeping items, everybody who joins the call is on mute to start with, so if you would like to ask a question during the Q&A section, please unmute yourself in order to do so. There is a Q&A panel if you do not wish to speak. The Q&A section of Zoom is one of the best features to allow you to communicate with us during the call if you have a question that you would like answered. And then finally, just regarding the CPE credits, for those of us who are CPAs, we need to answer the 4 polling questions that we have during the webinar in order to earn the CPE. And then 1 week after the webinar, you will receive an evaluation that you need to please fill out, and then afterwards you will receive your CPE certification. This call, as we mentioned, is being recorded. However, the recorded session is not eligible for CPE credit. So thank you to everybody for joining. We'd like to jump straight in here and quickly discuss the remainder of the webinar series that we have. The webinar series, we've already had 2 very fruitful editions of the webinar. Today we'll be discussing the data collection and abstraction. Next week we're moving on to the embedded leases, a very technical section that we found that the marketplace is experiencing as quite a difficult aspect of the implementation. Then we have the processes and controls. That's really your day 2 to make sure that you galvanize your systems around the lease process to ensure long-term success. And then finally, we've got the vendor rationalization and cost savings, and this is the hidden benefits that we have of the data collection process throughout the 842 adoption. With that, I want to introduce my esteemed colleagues. I have with me in the room Michael Cahill, one of our managing directors, 19 years experience in the accounting and financial leadership field, with a multitude of industries and positions under his belt. He also has significant experience with public and private companies across a multitude of industries. Particularly in the 842 space, he is one of our leaders and has certainly seen his fair share of implementations for the 842. Then we have Steven Sayewitz. He is a senior manager here, and he is one of our subject matter experts. He's had a variety of roles in accounting and operations throughout the years, and as a subject matter expert, he has led many of our client implementations, particularly, and of note, we have the adoption of several projects on Fortune 100 companies. Leading those works such as abstraction, implementation, technical accounting, and in the future process state design. So Stephen is one of the foremost 842 experts. Right, so with that, I would like to kick off with the meat and potatoes of today's discussion and hand over to Michael to start with.
Thanks, Craig, and good afternoon. Thank you all on the line, on the Zoom, for joining us. We're excited to take this opportunity to share a little bit about what we've learned and what we've seen through, I guess, going on 3.5, 4 years of working on the new lease standard. It's different, I think, than we expected at the beginning when we started talking about these projects and the adoption of ASC 842 or the International 16. I think as you get into your implementations, or for public companies, now that you're in day 2, you know that these projects are different than we each assessed at the beginning. So I think, Steven, as you and I were preparing for this session, we talked about a couple of things that I thought were interesting, that you had observed from your clients, things they've asked you or comments they've made, that while interesting, I think it will also, for the folks on the Zoom today, be impactful just to help you understand some of the things you may encounter and some of the deviations your adoption will take. So, Steven, I think you can, a couple of them are fairly entertaining, but share a little bit of some of the comments you've heard from others.
Sure, yeah, thanks, Michael and Craig. So, as we go through our implementation and as we've come to the end or near end of some of them, I often will get the question, and I think this is a good jumping point into some good content, hey, you guys, Riveron, you've been helping us for the last 6 or 8 or sometimes even longer months. Is this all that you do? Are you a lease accounting shop? And I often, laugh or chuckle, because ultimately the answer is no. And then the reason it is no is because from our view, this is a true business transformation project. Here at Riveron, we cover a variety of service lines, a lot of offerings, and we think the uniqueness about this standard is that it does cover technical accounting, system implementation, process improvement. It has an impact of organizations at a cross-departmental level. When we initially start our projects, we're talking with the controllership group, technical accounting, people in the operations, in the fields, procurement, financial reporting, tax, really the full suite of the company's operations. And I think that's very indicative of what we do as a service provider and what is required under the new guidance in areas we need to address. A lot of our work revolves around event management, event response. This guidance does have an impact if your company or organization is going through M&A, if they recently or about to go through the IPO process, if you have other system changes such as upgrading or changing ERPs, and then also, on all compliance changes, similar to what, RevRec had, the new 842 adoption is a true, obviously FASB compliance change. So, we really observe that this does cover a full scope of business operations, and our involvement and our organizations we serve's involvement does span a wide variety of people and places.
Yeah, I think that, Steven, that really dovetails into some of, what we've seen, right? We've seen on, I think we've done several together, 842 lease accounting implementations and adoption projects. And those projects have spanned, like you said, system implementations, data collection, aggregation, and normalization, technical accounting, policy elections, and then PMOing the whole project. But what we've seen consistently is that it's each one is unique, but what we see that the commonality between the projects is the complexity. I think I alluded to this earlier, that the project will deviate in terms of direction, but what's almost always underestimated is the complexity. The topic today is data, common challenges in collecting your data, what types of data. But I think that's one of the leading drivers in complexity. But if you could talk a little bit more about that, I think it would be helpful for the group here today.
Yeah, for sure. So like as Michael just mentioned, through the various stages of a 842 adoption, data abstraction, data analysis is
in our opinion, and I think a lot of our clients and those who are either going through it or about to go through it will soon come to realize is one of the more complex and arduous parts of the process. If you think about what are the causes of that, these are often due to the historic decentralized nature and, quite frankly, lack of oversight of this information due to the old standard requirements. Under 840, you know, it just did not require companies and organizations to look at this information as it does under 842. As we'll talk about in the upcoming slides and throughout the presentation, the data points that are required to be extracted, you know, have to have a certain level of, you know, source information as well as management inputs and practicality to be applied under the 842 guidance. So, you know, I think it's a great topic. I think it's, you know, if done appropriately, it can be a huge time saver, which, you know, because they're going to have a better understanding of what these data points are to help make better decisions in the future after the initial implementation is done, you know, understanding what has been extracted from a historical basis and how those can be applied, those lessons learned can be applied in the future, and have that known throughout your organization, not only at the accounting level, but also at the operational, field, market, you know, the whole suite of involvement.
Great. Thank you very much, guys. That's some interesting insights, and I think that it's a very nice conduit for us to move into our polling question. I'm going to launch the poll, and we can just discuss while everybody has an opportunity to select how many assets they have in a lease portfolio, just to discuss the reasons behind a question like this. So I think something we found that's so interesting is in the market, particularly in the private market, where you have a company that has perhaps maybe 0 to 50 leases, as we have as the selection, the driver towards perhaps using Excel as a model. And the interesting thing is that quantitatively, of course, there is a driver. Quantitative is a driver as to your lease complexity and the complexity you're going to see behind your process. However, there's qualitative, there's definitely qualitative aspects behind the adoption that need to be addressed too. So how many assets do you have per lease, for example? We've seen many abstractions where there's a one-to-many relationship. You have one lease agreement with many assets. What future state design do you have if some of those assets change? What languages do your leases come in? We've often seen leases come in European languages that make it very difficult because those need to be translated. And obviously that adds a tremendous layer of complexity. So that's why it's just interesting to know and to talk about the amount of assets in the portfolio. And I think we've got a fairly decent spread here. The majority of the folks on the call have your 40% have 0 to 50 assets, and then we do have 23% of greater than 500 assets. So that's actually very interesting to know. And just for those out there that have the 0 to 50 assets, just to understand that it doesn't actually mean that the implementation and adoption process is going to be very easy. Yeah, just as far as our observations.
Are we able to see the results? I guess, can we just share with?
Absolutely. So there we go. We're sharing the results now.
Yeah, interesting.
Yeah, so as I mentioned, we've got about the 40% there, 0 to 50 assets, and then somewhere in between. So it's more or less what we would expect as far as the distribution goes across the market. So.
Right. And Craig, just to add on to that point, you know, this is, I think that's at the surface, these are the number of assets a company believes they have, but as you peel back the onion, you look at embedded leases, or other factors, those amount of assets may increase, or when you take into materiality thresholds could decrease, which also impact your implementation efforts, or approach rather.
That's a very good point too. I think it basically boils down to you don't know what you don't know,
right?
Particularly at the beginning of the abstraction process.
Okay, I think we'll highlight now some of the approaches and some of the considerations or factors that you'll encounter or consider as you go through the abstraction process. The abstraction process really entails, I guess, what we call aggregating leases, actually getting the contracts. Once you have the contracts and you're comfortable with the completeness of that population, then you've got to extract the data from those contracts. It's either in the form of an actual document, it's data's in emails, you've got some type of database, Excel or Access, where you've gathered your lease information. There's asset management systems, fixed asset management systems, upstream systems like that, where you can export the data for your leased assets. But you've got to gather the data, and then it's got to be normalized. So who's going to do that? What does your team look like? We've seen models that are entirely internal, or companies have outsourced it completely, and then we've seen hybrid models that we've worked with. Each is valid and reasonable. It just depends on each company, each scenario, and each team's skill sets. But
yeah,
Steven.
No, I was just going to say, the pros and cons to all of that. The approach in terms of your resources are, of course, with using internal resources, these are the people who are going to have the most company knowledge on all of your assets. These will be your subject matter experts as it pertains to your assets within your organization. The cons of internal is, of course, all of these people also have a day-to-day job. They, this adoption does require a large amount of effort, or it requires a large amount of time, and organizations don't want to fall behind on their day-to-day activities and the one resource's roles and responsibility as a result of adopting this process. Hiring a third party, you kind of alleviate some of the time associated with using internal resources. Oftentimes, these third parties will have a lot of experience. They would be doing this previously or concurrently on other projects where they can leverage lessons learned, either as it applies to system implementation, understanding of the guidance, application of the guidance, especially under the data abstraction piece. And then you have your hybrid approach, where we feel is really finds the most success, where you're utilizing a third party for all of its benefits. It's taking time, or you're doing some of the heavy lifting instead of utilizing internal resources, but then also having a very strong internal project management team who's involved in every step, every part of the process, and could help advise your third-party resources in areas where they don't need to be spinning their wheels, and they can get a decision or they can have a decision made rather quickly that is aligned with the corporate's objectives and kind of what they view the ultimate end goal of the project should be. You have a lot of times where there'll be multiple third parties involved. Some have benefits on, have some data abstraction abilities in terms of data analytics. Some may have more value in the technical accounting realm. While we do understand the approach there, and sometimes it's a cost-saving method or relationship method, we feel that if you could have a hybrid approach with a third party that can provide the full scope of services in terms of abstraction, technical accounting, if you are using a system implementation, or development of a Excel-based model, that's really going to provide the best results, because it's going to bring a congruent effort on all parties involved and just, create a environment of success, for all future decisions. In any case, communication is key. Daily, weekly communication at all levels, executive steering, corporate oversight, field operations, BU level, as well as all of your third-party participants, just being aligned and having clear objectives and measurable goals throughout the project is really going to be, again, set yourself up for an environment for success.
So then now we talk a little bit about resources, time allotted, and I think just to set the context a little bit, a lot of what we've worked on is with Fortune 1000 companies, public companies. Their adoption was 1/1/19, so now they're sort of in day 2. They're working on their accounting processes, getting prepared to close Q2 here coming up in 5 or so weeks. But when you look at the models that we worked with, a lot of it has been in the context of a lease accounting system, a lease asset management system. So when we look at the up to 4 hours per lease, I think that's probably eye-opening for a lot of people, and it's meant to be. But when you look at the data fields required, the data points required when you've got a lease asset system, it can take that long. And that's from going through, assessing the lease, abstracting the data, and then validating the accounting output. But the range is really, I think, 1 to 4 hours on the leases, depending on how normalized those leases are. If you have leases that are very consistent and you're using a fixed template for your lease contracts, that's one thing. But if each lease is a PDF and they're all different and distinct, it's going to take a longer time naturally. So there's also, we have worked with, and I think Steven will probably talk a little bit more deeply on this, we've worked with different technologies, OCR technologies, AI, that are used to abstract that data electronically. And those are tools that you want to consider, you want to factor in. We're consistently looking at new solutions, new technologies, and there is value there. But when you don't have a normalized, standardized contract that you're abstracting data from, the usefulness of those tools and products is limited and consistently requires manual interjection, manual follow-up to make sure that what was abstracted is correct, is complete. So great to have that technology. There's certain solutions out there that are better than others, but it really is limited. And just, I think the main point here is don't put all your eggs in that basket, that you're going to leverage an OCR AI that's going to take all the headache away from gathering your lease contract data.
Yeah, no, I mean, spot on, Michael. I think, when you think about, when we think about the data available, we put it into 2 buckets. You have structured data and unstructured data. If you think of structured, this is going to be your data that's already aggregated and normalized in your either accounting system, ERP system, asset management system. It's already vetted against and aligned with your ERP master data set. There is consistency. That's what the normalization comes in place between the naming conventions. Oftentimes you're going to see information could be duplicated within your accounting system where it's meant for the same name, but it could be spelled out differently or named slightly different in the presentation. For your unstructured data, this is where information is coming out of PDFs, email, company knowledge. This is where this is where you're going to find yourself in the higher end of that 4-hour spectrum, because it will take time to read, interpret, analyze, aggregate, normalize this information. And all of this is being done, it could be done by a third party and then also has to be compared and spoken to with an internal management team. talking on the point of the systems, the AR and OCR tools, we spoke to a few of those systems and have found value in it. Under the standard, though, there is a practical application where you can't just take all the information as it comes out of a contract, because as we'll get into in a little bit, it does need to have the practical application of what management actually plans to do. We found these solutions, which they vary from straight, contract analyzer to having a human element of these systems to review this information and normalize it themselves. However, sometimes those human elements do not have the understanding of the guidance as it should and as it's required to be put into a system or applied to calculations. I like to think about it as some of these solutions can provide a 15 to 20% time savings and effort savings, because it will help you aggregate the information. It will help you in a contract management situation, especially if you have a large amount of PDFs that aren't digitally stored. You can scan them into these softwares. You can create fields, highlight information that goes specifically into a field, and export it out into Excel to be further reviewed by management. And we found this to be tremendously helpful in our large unstructured data situations. As we also talk about foreign language leases, if you don't have the support of that local market to translate or take out that information, some of these softwares also have the foreign language translation capabilities, which, as you can imagine, could be very helpful to a corporate group sitting in the U.S. to get the information quicker for leases that may be held, in Europe or South America or Asia.
And one quick point that I just wanted to highlight, something, Steven, that you made me think of. When you're gathering your lease data, just one practical point to consider: where do you look for this data? Obviously, capital leases, we've got that data captured. Operating leases, a little bit less captured in terms of data, or what are our leases. Well, you can review your disbursements, past payments, a check register, and look through there over a period of time for recurring payments. You can look at the vendor that's getting paid. Does that give you any clue that it could be a lease? And all of that will lead you to getting your arms around the completeness of your lease portfolio, and then the contracts that you need to extract that data. It also will sort of start you into the waters of what the concept of embedded leases, other types of legal contracts that may contain a lease. Not a new concept, but certainly a new focus under the new lease standard, because now these contracts are going to require balance sheet accounting, are going to go through an audit. So our next Ask the Experts webcast will focus on embedded leases, so tune in next time for that. But Steven, back to one of the questions I think we received.
Yeah, and I just want to quickly state, we did receive a question as we've been talking. Are there any ASC 842 softwares that do address the ability to read this lease information that Michael and I have been talking about? And to my knowledge, I do not believe there are any systems that do bridge the OCR AI technology into abstracting data points. I know many of the softwares do allow you to upload documents and attach them to leases, but there would be a manual human element in identifying what information within those leases could be applicable to your 842 calculations.
Right. Steven, if I can just add to that, there has been some significant use of these systems, and we've seen it, with varied ability. It knows, a lot of this software will know how to pick up specific phrases that it'll know to look for, that would be fairly common across all of the lease contracts that are drawn up, but nothing that is ever going to, unfortunately, take the place of human intuition, having a look at that and actually being able to analyze a lease contract. So while it is definitely, there's some ability out there, it's certainly not something that would replace controllership and the various parties that Steven mentioned in working with this data.
Yeah, thanks, Craig. So as we think about what are the key data points that we need to take from these contracts to perform the calculation of your right of use asset and liability, and also provide you with the appropriate P&L entries. If you think about the main driver, it's going to be time and money. You know, at the end of the day, these are two key data points which have a lot of underlying sub-data points associated with them. If you take time, for example, you know, you have your contractual term, you have holding periods, and you have all the events that may impact the difference between those two items. Under the 840 guidance, you may not have to consider how long you will actually hold the lease for. With 842, there's a holding period element where you may have to consider, okay, you're in a place, let's take a real estate asset, for example, for 60 months, but you have another 60-month extension available for you within the contract. You know, your real estate group may know right off the bat that they plan to stay in that building for the full 120 months that the contract gives you an option for. So how that applies to the calculation is now your right of use asset is going to be calculated utilizing that 120-month period. You know, I think this is really important, and this is where the whole human element comes into play, kind of bridging off that prior question. You know, just because if you had a system taking out all of that information, it still requires somebody familiar with the asset, familiar with how long you're going to hold that asset to make that judgment call. Along those lines, within a contract, you can have various payment amounts that are included or may reduce your amount to be paid for a given period. The guidance will tell you, you know, you want to take into account all of your fixed payments, rent-free period, interim rent, escalations, lease incentives, IDCs. So all of this information has to be considered when doing your right of use asset and liability calculations. This is where, you know, we see oftentimes companies may abstract this information initially from a contract itself and then go back to the local markets, and they're going to provide additional information on whether those amounts were actually taken or if it was different when the final contract was signed. Alternatively, you may get this information from the local market and go back to your corporate oversight or your corporate real estate or asset management group, and they may have a differing opinion. So it really takes that human element, that organization, communication to identify what exactly these terms are and apply those to the guidance. Kind of additionally on the date side, you need to look at what your commencement date is, your lease start date, when are you initially going to apply accounting for a given asset. And you even have to consider, did you get that asset earlier than what the contract states? And many times, we'll talk about equipment leases here, you may have a lease starting on June 1st, but you got the right to use that asset on May 15th. Well, under the new guidance, you need to apply that May 15th date as your right to use the asset date or as your accounting date, and that begins the asset and liability takedown, and then all subsequent depreciation from there. So again, just really needing to look at each transaction on a very detailed basis to determine what the appropriate application of data points are given the new guidance requirements.
So a lot of data, a lot of sources of data. I think we'll talk about the next, we're going to go to another polling question. Craig will introduce that, but then when we come back, I just want to talk about one of the practical expedients and a shortcut that, you know, we've talked a lot about what we have to do, but the FASB threw us a bone in terms of reducing some of the data. So we'll talk about that after the polling question, Gene.
That sounds like a good idea. We all know that people like, if we can take shortcuts, we need to take shortcuts, particularly with what we've said so far. Steven's talking about the dynamic nature of the teams and the data involved. Shortcuts always going to be welcome, Michael. So just to discuss polling question number 2 here. This talks to the qualitative side of your portfolio, which I mentioned earlier, and this is in fact where the magic is really going to happen, because once you start assessing, particularly as a multinational, once you start assessing where this data is actually stored, who controls it, who has access to it, this is where you start to see a lot of complications in your leasing 842 adoption. So just to let you know, this is a driving question that, you know, almost the genesis of your 842 adoption process is to ask this particular question more than anything else, because this will drive where you're going to start looking and to look at how much you're going to expect in terms of time on the adoption process. So thank you very much to everybody who's voted here. Some interesting results to have a look at. So we've got quite a few here. The largest percentage is the fact that we haven't determined how to handle the lease accounting yet. And that's no surprise whatsoever, particularly for the private companies. I think if at this stage a public company is there, perhaps maybe take Michael's contact details at the end of the call and contact him as soon as possible. But that's, again, it's no huge surprise. Just for those, you know, talking about module associated with the ERP vendors, there's definitely quite a lot out there at the moment that we've seen. So just to go through the processes that we've been discussing is still very important, regardless of the power of the software. Data collection is definitely still going to be very prevalent. So Michael, I'm going to hand back over to you. You had one outstanding item from the previous discussion.
Yeah, just one point. You know, we had a session a couple of weeks, I think it was April 25th. These sessions have been recorded, so you can get more detail, but it covered the practical expedience that the FASB has issued since the original issuance of 842. And that, one in particular that I think is relevant, will limit the data we require. So they eliminated the requirement for comparative periods. So if a company chooses to elect that practical expedient for, say, a private company calendar year end, or the year ended 2019, they would record their leases under ASC 840. For 2020, they would record it under ASC 842. So different standards in the comparative financial statements, but that's one of the practical expedients they gave us. So what that would do is basically any lease that ended by 12/31/19, a company doesn't need to abstract and account for that data other than how they have been historically. So just a little nugget there that will save us some time if we elect those practical expedients on the adoption. So more back on the recorded session on April 25th.
Yeah, great. Thanks, Michael. So thinking about, you know, we just talked about some of the data points required to calculate your accounting entries. Now we'll talk about the data points required to make sure that those entries make it into the right place within your ERP and ultimately into your financial statements. Now, as you're thinking about and especially if you're using a system, you may need to also take into account any cost centers, ledger codes, definitely account numbers that should be tagged to each of your lease transactions. Oftentimes, you also need to consider the business units or entities and lessees associated with those transactions. And depending on your ERP or ERPs that you have within your organization, you're going to need to configure this data within a system or have a external mapping of this information and apply it to your monthly journal entries. Every organization is different. For the more complex ones that may have multiple ERPs, this is going to require, an in-depth level of research and application of this information to a lease transaction, especially if any of those leases do have an allocation component, which we'll probably get into later, or have different buckets that they wish that the information be presented on their financial statements. An example of this oftentimes is we're going to see your P&L are going to have expenses by different asset types, such as equipment, real estate, vehicles, or any other leases you have. Organizations that have gone through historic change may have multiple accounts for the same asset type. So this adoption actually provides a great opportunity to take another look at those chart of accounts and apply the ongoing expense entries or ongoing other balance sheet entries under the new guidance to more accurately or in a kind of more in a consolidated manner present this information. I think this is a great, like we said, business transformation opportunity that you're going to have, and using the data abstraction as a way to investigate, research what currently is being done is just, again, provides you with a good jumping off point to refine your business process. Depending on if you are using a system, you may need to configure this master data in a system itself. So that also is going to be one part of the implementation, is configuring master data associated with your accounting structure.
Great, thanks, Steven. I would just like to note, must apologize, we've skipped a polling question. There seemed to have been a bit of a mix-up with the most recent one that we did. So I just need to skip back 2 slides to actually present which polling question we were asking. Unfortunately, you answered a slightly different one the last time. I apologize for that. So I'm just launching this one now, talking about the current status of your lease portfolio, whereabouts you are in the process, and just to gauge where pretty much where you are, where your head's at the moment. So just launching the poll there. And we're finding, in the public sector, we're finding that companies are starting to wind down fairly significantly, and we're starting to see a ramp up in the adoption process with the private companies. So that's to be expected, I think, at this point. So it'll be interesting just to see where the folks are at the moment on the call. Thanks to everybody who answered there. Just the polling results, as you can see, pretty much what we would have expected here, actually, not having assessed the lease portfolio as of yet, and that the contracts are decentralized. That's actually what we're going to see for most clients and most folks in the market, because provided you have multiple business units that you operate with, you'll see this kind of outcome. If you have contracts that are centrally stored by asset management, I think that then you're in luck at the moment, particularly with regards to the data process.
Great. Thanks, Craig. As we're going to the next slide, I think, it's important to, as we've been talking about bridging the technical application of the guidance into your data abstraction, we want to talk about lease versus non-lease components, practical expedience, purchase accounting. All of these have an element to apply to your data abstraction that, if not considered early on, could cause you to do the dreaded rework, which nobody likes. Because one, it could use up internal resources, time, and more impactful, it could create more cost if you're using an external third party. Companies often look at the lease versus non-lease decision in a way that, first off, what is the balance sheet impact? What is the gross up going to be? And then also, what are the efforts included in breaking out those components? As you're looking at contracts, you may or may not be able to easily break out lease and non-lease components, which would kind of pave the way for your decision. Additionally, if you're looking at your practical expedience, the package may let you grandfather in historical classifications, which would also help your initial implementation in that you do not need to take all data points into consideration. One in particular is the fair market value. Fair market value is often something that companies do not have on a historical basis, especially for real estate leases. The guidance does give you some relief in this matter because it does say if you cannot reasonably obtain that information on implementation or going forward, then you could not take that into account for your accounting classification as one of the tests. It doesn't mean that you don't have to perform all the other tests for accounting classification, but you can circumvent this one specifically. I know using some softwares, they do allow you to tag leases, real estate leases, as not having this information, which would allow you not to abstract that information or input it into a system. If you're doing it manually, you of course can make that decision or make that application easily. Also taking into account materiality, short-term leases, discount rates, all of these have a technical application to whether or not you need to abstract this information. Again, I highlight these because oftentimes these are considered too late in the implementation, and then you have to go back and reperform abstraction and go talk to people that you may previously already have spoken to, and it just causes a delay in the overall completion of the project.
Steven, I think one thing that would be interesting for the audience here is we've talked a little bit about our effort has been, a lot of it has been in the context of with a system, right? We're implementing, we're helping a company adopt or use, leverage an lease accounting system. There's some that are focused on the lease accounting, some that are really deep enterprise-wide lease accounting and lease asset management systems. But what are some of the compelling reasons that a company would or would not elect to use a system as they go about the adoption of 842 or IAS 16?
Yeah, great. So, I'll speak to, since this is something we have the most experience with, why a company would want to use a system. First off, most systems enable a bulk import functionality, which allows you to include in your system a large amount of leases much easier than if you were calculating them independently outside of a system. Additionally, a system can help with ongoing lease management. As we discussed, the new guidance has to take into account events within the contract, such as end-of-term events, mid-term events, which may be in the form of renewals, early terminations, impairments. All of these things do have an accounting impact, and by utilizing a system, it should provide a more streamlined way of getting those events into your monthly journal entries. The guidance is quite complex in management of or application of some of these events. So utilizing a system does not only increase efficiencies, but it also increases accuracy when making those changes. I'm not going to lie, there are some drawbacks of using a system. Some contracts may have unique payment dates where it's not being paid, on a consistent anniversary. There could be some partial periods involved, but at the end of the day, I think those drawbacks are very limited when compared with the benefits of using a system. So we have found great value in utilizing those systems, and I think we've done a good job in helping clients understand and create processes around those systems to enable them to have a future state functioning lease accounting department and lease management department. These systems historically, or these assets historically, may not have been in a system. So there's a lot of benefits of now having a centralized set of data associated with leases, which management and operations could make future decisions on. An example of that is if a company was not using a system, they may not have any indication of when a lease goes month to month, or when they would have to renew or renegotiate terms. Systems can provide end-of-term activity reports, which can enable you to make those decisions early on be proactive as opposed to being reactive as it may currently be.
Great, thanks, Steven, and thanks, Michael. Those comments definitely give everyone on the call a lot to think about. I'd like to just move on to our final polling question here. I think this is an interesting discussion point too, is just to see where everybody is planning, or how everyone is planning to abstract their lease data. What kind of resources they have at their disposal. At the moment, we've seen varied success across all four of these choices. But with the complexity, we have found that it's really important to engage experts in the field. Just waiting for a few more votes to come in. Okay. So thank you to everybody who voted.
Just mix, huh?
Yeah, this is actually fairly interesting. So we are seeing 34% of the attendees have not decided how to collect data points. Again, not a surprise whatsoever, particularly in the private space where deadlines are not necessarily looming. And then for those using internal resources only, just to, again, mention the complexity around the guidance, around understanding how the data abstraction process is really governed by policy decisions, and to make those wisely to ensure you maximize your results.
Just one practical point from a corporate governance to try to layer onto this, but this is going to be a key decision, how you're going to go about it, internal, external, hybrid, what you're going to use, system, no system, practical expedience, how you're going to make each one of these policy decisions. Just put someone in charge of documenting that or gathering those minutes from meetings and notes throughout the process, because from a corporate governance perspective, documenting any change in accounting standard is important. But the auditors are going to want to see this, and we know they're going to come in down the road much later in the process. And we've seen time and time again where companies haven't done this, they haven't proactively documented throughout the adoption project. It's really hard to go back and to backfill all that documentation. So just a practical note, corporate governance note, get that documentation, assign someone right now. We've had some really good client project managers that have kept that file going in terms of their documentation approach and their election. So just a tidbit on that.
Thank you, Michael. Just moving on to some Q&A now. In the last 5 minutes of the call, Steven, I have a question here that I think is going to be best answered by you. Just in terms of complexity of asset categories, what have you found have been the most difficult leases to abstract? Yeah, I think just in terms of your experience, having dealt with so many different companies and industries, interested to hear your thoughts.
Sure. Well, I think, real estate are usually the most material impact of the new lease guidance, usually because those are your high dollar ones. They also come with a lot of baggage, if you will, lack of technical term. You're going to have IDCs, you can have lease incentives to be applied. Oftentimes there'll be free rent periods either in the beginning or at the end throughout the lease that may need to be applied. So those are definitely areas where the payment schedules get more dynamic. They also have a lot of CPI or index-based increases, which has its own uniqueness within the new standard that need to be considered. This has often been, during our implementations, especially for historic leases, a source of high amount of questions from our clients on how to handle index-based increases. Typically, vehicles are a little bit more straightforward. Often, if companies are using a fleet management service, a lot of the data points can be obtained from them. We have also found that there are embedded index-based escalations or cost of fund escalations built into vehicle lease payments. However, while they usually deem immaterial on a lease-by-lease basis, depending on the size of your fleet, they may have a material impact. So that just needs to be looked at on a case-by-case basis. And then, finally, if we're talking about equipment leases, and I don't mean vehicle or transportation equipment, I think those usually have the highest amount of volume. So those come with their own complexity associated with volume as well. So hopefully that kind of helps give a few pitfalls or things to consider for each lease type.
Great. Thanks, Steven. Just to quickly wrap up here, for any unanswered questions, we'll like to reach out to you individually after the call. So we appreciate you engaging with us during this call to discuss the upcoming webinars. We do have the embedded leases, the process and controls going forward, and then the vendor rationalization. So we would love to see you then. Please join us. And then
we've seen some benefits with. If you think about it, we're doing an inventory of our leased asset portfolio, and as one CFO described it, many companies are probably delinquent in that area. It's data that hasn't been centrally managed historically. So now we're going to have all that data. There's some cost savings to be recognized now that we're managing our vendors centrally or looking at that data centrally.
Fantastic. So if there are any follow-ups after the call, we would encourage you to reach out to either Michael or Steven. If you have any questions regarding the webinar or any other topics 842 related, they'll make it very exciting for you to listen to. They can go into great depth within that topic. And with that, we would like to thank everybody for joining us. We hope you enjoyed it. And we look forward to seeing you next time, the next exciting webinar that we're going to be hosting. So take care, and everyone have a good day.
Thank you. Good luck.
Thank you.